Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 1st of March. All right, now let's just have a look at what's going on. There's been a big surge in the dollar over the past few days. You can see the dollar index here just on the hourly charts heading up through 90.60. There's a bit of work around that trend line and now sort of broken higher. Now, putting this together, I mean, this is where a proper news service comes into play, because you can sort of not only see what's happening, like on the equity markets here, you might be sort of scratching your head around, you know, where that direction's coming from for the dollar. Now it has come via the treasury yields, right? There's a lot of talk about the spike in yields here, especially say the 10-year got up to 1.6%. At the moment, it's around 1.4, sort of settled down after Friday. But higher bond yields make the dollar more attractive, right? And that higher bond yield itself, people will be taking money out of the equity markets and sticking it into treasuries. And so you could see the equity markets take a bit more of a hit. In saying that, the so the tech stocks are still going okay. And so there's been a big rush to the dollar with those higher yields in play. It just makes the dollar more attractive. Okay, so when we're looking at the major currency pairs, obviously there's the dollar index again, sort of heading higher. Dollar Swiss, you know, had that initial sort of surge earlier in the week and now sort of just treading water up here. You can see dollar yen still sort of moving to the top side, although it's not as dramatic, but you know what? Stronger dollar across the board is what we're seeing. Dollar CAD also, massive correction. The market was very short dollar CAD, big short squeeze along with that dollar move. And you saw oil sort of drop from sort of 64 to 61 bucks. That all points towards a high dollar CAD. Now, some of the price action here, it's been a bit tough, right? So you look at the middle of last week, euro, like really, and actually all the currency pairs, sterling's been out of control for some time. It's good to see it come back into play. Aussie touched 80 cents and Kiwi up into the mid 74s. Like, this is a real clean out to the top side. If anyone was short last week on these on the dollar block, they're definitely probably out by now. And then you see the big move to the downside. Now this is, let me just explain that the move to the downside, you've got this previous resistance line, right? Which is going to act as a bit of support here. So not only people going long, all the shorts taken out up here on that rally above, well, I'll get definitely above 122. And then as it comes back down, all those positions are restopped out. Market starts to get short and we're now back down here under 121. So this is a fair bit of carnage for all the technical traders out there that would be thinking, well, you know what? Euro's gone topside. I've been saying it the last couple of weeks, the euro fundamentals are pretty crap, right? Well, we had to get something big in the dollar to get things moving. And we got sort of a bit of both. Dollar weakness to kick it into gear and then dollar strength via the move in the US Treasury yield. So, and that's sort of really come back down. All the euphoria around the sterling rally. Sterling's rated about 500 points on the back of the rollout of the vaccines. I mean, that's got to be short term. I mean, that, you know, sure, it can lead to, say, economic growth if everything goes well, but it just didn't, you know, it's hard to call the top in sterling. Let me say that. But I just couldn't see it being sustained for any lengthy period. And the same for the Aussie, right? This is, you know, the big rollout of vaccines, et cetera, globally. There's that's where the big push into the US treasuries is coming from. Kiwi, once again, it's topped out on a big rally and now lower. So what we've got at the moment is a bit of a stalemate. Now, the last sort of 6 months, we've been seeing big surges in the dollar, and then it comes straight back. It's going to be very interesting this week because we've got the US non-farm payrolls, and that's going to determine a lot about if the moves in the treasuries and the US dollar connects with the key macroeconomic fundamentals, right? So that's what the market's going to be considering. I don't think we're going to see the dollar continue this massive spike higher, especially as the non-farms get closer. You probably expect it to come back into the mid-90s, you know, which isn't far away from where it currently is. But some of these pairs, you probably think they will come back just a bit leading into the non-farm payrolls, bit of a retracement ahead of that, and then we'll see where the things go from there. But at the moment, it's we've got dollar strength, and you can't deny it. The risk on, risk off profile, well, you know what? It's not in play because there's something else in play. It's the treasuries, not the equities, right? The equity moves will come from the US Treasury moves. So you got to keep an eye on that as well. maybe tricky for some people. If you are looking across the news, make sure you just have a read into some of these stories, right? The dollar gains on higher yields, risky currencies weaken, right? Aussie, Kiwi, CAD in particular. Have a look through that. And there's a bit of, a few comments here about various currencies, but it's put simply, it's just a dollar strength across the board and a bit of a clean out of a lot of stale positions almost. Okay, now if I just have a look at the correlation matrix, now I've just tuned this up. Just have a look. There are some things still correlating with equity markets, right? So some of these pairs down here, the euro crosses very high. The dollar index, it's moving with the, I think it was the stocks actually. If I can just move that up a touch. Yeah, the stocks index and dollar CAD. So just have a twig through. If you can't see clearly what's lining up, that's where the correlation matrix really comes into play. And just having a look across the board here, with the other major instruments, and I've sort of got these isolated. So the majors, okay, there's a bit of uniformity, but the market's just open for the week. It's good to see that they're sort of fitting into line, but there's no major moves. Safe havens got a bit of a belting last week. Okay, this sort of, bit of the global uncertainty around the vaccines and everything else is sort of dissipating somewhat. So they've been taking a bit of a hit. One key one here that you should just keep an eye on, right? This is the volatility index. And it's still up around 27.95. So this is a good way to sort of measure like how confident is the market in what's going on. There's a fair bit of uncertainty around this current move in the dollar, and volatility index is, or the volatility index is still somewhat high. I usually use 20 as a bit of a benchmark where under 20 volatility diminishes and there's, it's just usually going back to sort of close to normal market conditions. We're back up closer to 30, and that's going to be something you just need to keep an eye on. That just means there's uncertainty around what's going on. That is obviously related to the equity markets. Higher treasury yields, equities could get hammered, and that's where that volatility may be coming from. So just keep an eye on that. Try and piece it together as we go through the week. Now, one thing that we're talking about, looking at closely, and it's about consumption and spending. The US consumption numbers on Friday were much better than expected. I think it was, just looking at some of this commentary, it was about the highest it's been in a number of years, a couple of years at least. I can't see that just a moment, but I'm pretty sure that's the case. So higher consumption, obviously that's going to lead into inflation as well. But the best thing you can be doing, besides reanalyzing your major currency pairs and the instruments that are moving very well, get onto the crosses as well and get all your technical levels set up. We've got some key data coming out this week. As I mentioned, we've got US non-farm payrolls on Friday, but have a look through here. Like the euro is now pretty much on its knees. We start to get some weak inflation numbers out of Germany. It could be a bit of a push to the downside. So I'm just scrolling down here through the data that's coming out this week. We've obviously got the RBA, first Tuesday of each month. We'll see what they've got to say. I think they've already said everything they need to. There's no change in the economic circumstances in Australia, so nothing there. Get some employment numbers, some more inflation numbers there out of the Eurozone, GDP out of Canada, Aussie GDP, and then you come back down, you get into the latter part of the week. By Tuesday, Wednesday, in that North American session, we should have pretty clear direction around what's going on. Then we're starting to get edged closer towards the US non-farm payrolls. And that's where, as I said, you come into by Thursday, the market is going to be massively focusing on these numbers and see if the sort of fundamentals in the US are connecting. This is the one thing that we've been missing is we get this big surge in the dollar, right? And so the dollar index is using that as the dollar example. Then we get the fundamentals coming out the opposite and it just drifts back into the range. This is a chance where we get really good numbers. We could start to see a substantial move in the dollar. And as I was saying there before, when I'm starting to look at a lot of these pairs and just coming back to the charts, like a lot of these currencies to me are so overdone, right? That I know this is a great correction and it cleans out the market somewhat, but you know what? This could be the start of a really substantial dollar move. I've been calling it for a while and it hasn't happened. Is this the time? Well, we're going to wait and see how the data rolls out and work out whether that is. So one good thing that you can be doing is make sure you go back through your longer term charts, right? So if I just come back to my risk page, and I've got, if I just, sorry, bring you back to the charts. The have a look through. These are all the majors, right, on the daily charts. Have a look through here. You can see here the dollar index just poking above that, well, above a substantial break above 91 will be key. You can see dollar Swiss breaking up, dollar yen's pushing through that level as well, and dollar CAD's right on the buffer zone as well. Euros hasn't really broken down through that major level. Sterling is still sitting above a longer term trend line, and it's got 350 points to go before it really sort of gets there, or about 200 actually. It's around 139. Aussie's starting to look a little bit precarious, and then the Kiwi, well, it's got a bit of a way to go as well. This is where you're going to see the longer term trends, okay, in the market, and it's well worth keeping a very close eye on your daily charts as we go through this week, especially with the non-farm payrolls coming out. If we get good numbers and we get a substantial break of these trend lines, the longer term trend lines, then the trend is going to change, my friends, and we will be looking for dollar strength across the board. And we got good levels here on your longer term charts, something to keep a very close eye on as we go through the week. All right, that's what I'll be sort of keeping a very close eye on as well. All right, guys, that's it from me. Lots of data rolling out. Keep an eye on the markets. As I was saying there before, the treasury markets, whether you're looking at the tables or just looking at the charts, keep an eye on the US treasuries. Definitely something to that's giving the dollar direction. If we start to see a move back down in the yields, then we will see the dollar come down, right? It's a pretty easy connection. So depending on what templates you're using for your market analysis or just following the market, keep an eye on the treasury yields and actually the equity futures, right? So if the Dow Jones continues lower, yields keep going up, we could see a real correction here in the Dow Jones and S&P 500 as well. All right. Anyway, plenty to happen, right? New month, new data, new central bank meetings, etc. This is where the monthly cycle starts, and it starts here today. All right, guys, have a good one. Cheerio.